What's going on, everybody? Welcome back to the Playbook Small Carrier Market update, where we break down what's actually moving in the freight market, specifically for the small carriers, my owner operators, my small fleets out there, just to make sure that you have what you need to keep moving. If you're running one truck, five trucks, 10 trucks, or just dispatching a handful of owner operators, this is a quick 5-10 minute check in to get clear on what's shifting, where the money is, and how to move smarter and not harder. There's been some changes this week and some things that stayed the same. So I really want to just go ahead and dig on into what we got in front of us. It's just important as we go through. First thing we want to talk about, obviously, we always start off with outbound tender rejection. The reason why, and we've talked about it before, one of the main reasons why I speak on the outbound tender rejection, because it just tells you on the health. It tells you on what other companies are seeing. And with outbound tender rejection, the more that they reject, obviously, the more that hits the spot market. Now, one thing that I'm not going to incorporate into these small carrier market updates at this time is there's a new functionality within FreightWaves Sonar that gives you a 6 month forecast. And that 6 month forecast is embedded into the new sonar technology. I don't want to incorporate that at the small carrier level at this point because I want to make sure that we're operating within the day. We're operating within the information that we have in front of us. Now, if you ask, there may be a time where we need to incorporate that. Sure, we'll bring that into the small carrier market update, but as for right now, we're not going to use that rolling, moving weighted average that produces that forecast. So we'll just stick to the basics for right now. If we think that the forecast is something that we need to put in place, then I'll be more than happy to do that. Let's start off with tender rejections. Right now they're at 669. They're down from a recent high of 772, but you got to remember that 772 was driven heavily by 4th of July. So we kind of got that 669, which is still a little higher than we've been for the month of June since pre 4th of July and towards the beginning part of June. So I do feel like we're starting to see some normalcy come out of the holiday, what typically happens. Obviously, it tells us that capacity pressure is easing, and what that means by that is that folks are getting back on the road again. You know, that holiday lull is gone now; it's got back to business. So the peak around early July, it put us at the highest rejection level since February. Hopefully, we'll start seeing some changes from that mix, but right now we're back down to that 669. Obviously, that momentum may fade if we don't see a change in volume. And I'm going to talk to you about volume here in a second because I think volume is what you're going to see. So that rejection spike we saw was just as what we thought it was. It was very, very seasonal. It was one of those things that we kind of expected, and now we're back to normal. So next thing I want to go to is I want to go into the volume index because the volume index tells us how much freight is out there for us to move actually. So you can see very, very clearly last week, you see where volumes were. Those volumes were there because of the 4th of July holiday, and now we're back to normalcy. They rebounded back to 261s, which still is soft when it comes to an overall volume perspective. It has been a steady climb that came out of that last 10 days. Obviously, that's that post-holiday demand. So what you're seeing is just it's just true to just holiday spending. And then we got volumes back above the 10,000 threshold, which gives us a little bit more strength because, you know, obviously when we slip down in those nines and eights, that's really, really soft. So I want to make sure that we kind of call that out, hoping that we see in that 11 market, that 11 range with the outbound tender volume index in comparison to what we've seen over the last, say, since beginning of June. Now, remember, we do have what we talked about on that last call, and we'll show you in the end of this one is we do have that spike in TEUs coming on shore. So obviously this is going to impact that outbound tender volume. Hard to see what that looks like over this next week or so, maybe 2-3 weeks away from actually starting to see that, see what that's going to take out tender volume. So just wanted to kind of keep that in eye for you. The next thing we look at is the National Truckload Index. Man, it's just flat. Looks a lot like what it looked like last week and the week before that. Spot rates are just as flat as they are. They haven't been unchanged for the last week, sitting at $2.36. We had a little rally at the end of June, but obviously that July bump is losing that steam as you see those rejection rates ease and those volumes staying flat. So one of the things that I want you to be cautious of, and I've been actually watching this over the past couple of weeks, and I don't want to scare anybody, but I want to prepare you that without that tighter capacity, and we'll look at this, the actual change in carrier dynamics here in a little bit, but without tighter capacity or stronger demands, we're going to see rates starting to retract. So that's one of the things I want to caution you on. And I will say this, I did look at the 6 month forecasting just in this specific category, which is the truckload index, in just this category. And I'm not pleased on what I saw. So that's what I'm concerned about. I'm just sharing my concern that the actual forecast got spot rate slipping as far as 12, 15 cents on a mile in terms of rates. So that's the one thing I'm concerned about. I'm hoping that we start seeing that stronger demand, which will help lift capacity. Lift volumes. And then also we're starting to see a little tighter capacity. So I'm hoping that's wrong from that standpoint. But I will tell you that I did see the actual 6 month forecast on that, and that 6 month forecast is showing a continuous decline. So just wanted to just caution you on that.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. The people that I see most successful in this business operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the Freight Waste Playbook.
Diesel prices, obviously, the pump's at a high right now. It's at one of the highest points that we've seen for a while. National diesel price averages at $3.73, which is up from $3.45 in June. It's 30 cents a gallon higher now than they were just a few weeks ago. So carriers are starting to feel that, especially when rates are not showing and not reflecting otherwise. You got that international oil demand oil disruption, that's really kind of driving that. Not more so that domestic demand. As you can see, there's not much freight to move trucks around the highway, so we don't see that domestic demand. But that international oil disruption is causing some of these changes. 30 cents is a lot, and that's the one thing to keep an eye on. And then obviously, as I talked about last call, if global tensions escalates, expect prices to exceed $4 a gallon quickly. We're only about 27 cents off from that, so I'm hoping that we don't see that. But we have seen a 30 cents jump in just a couple of weeks. We're not far from having to see that. And as volatile as oil is, that's very, very much possible. Now, as far as spot rate changes over the last 4 days, I like for you to take a picture of this, pause this, do whatever you need to do to make sure that you have an idea on where your areas are. You remember around 4th of July, everything was blue. Now, remember I said, hey, give it a chance, let things kind of subside. What you're seeing now is you're seeing that southeast that was really strong part for us for a while, especially over the last 4 to 6 weeks. That southeast was running really, really strong. That's kind of subsided, and the spot rate changes in those areas have went into the opposite direction. Now you're seeing more of that blue in the middle of the United States, in the heart of the United States, in the Missouri, Kansas area. As you look into that area, all the way from the middle part of Texas near the Houston market, all the way north. That's where we're starting to see more blue in terms of spot rate changes. But look how red the areas that's been really, really good to us for the last several weeks. Those areas are not so good in terms of that. So that's the one thing that I'm looking at, is that these week over week shifts, there's some volatility as we go through the midsummer. I'm not seeing a whole lot of strength in the marketplaces, and a lot of your stronger markets are starting to get smaller and smaller and smaller as far as those windows are closing. So make sure you take a snapshot, take a picture of this screen, share this out with some owner operators. I want to make sure that we call this out, because this is really, really, really important to see. Now, again, as part of my small carrier market update, I've been including reefer, ensuring that we keep reefer out there and showcasing what reefer's doing. Outbound tender rejection is down just a little bit. It was close to 13 last week, down to about 1204. Produce season now is peaked a little bit early now. I was kind of going through out in the country yesterday and seeing harvest is really starting to pick up in some particular categories, but capacity is still tighter than van, just not escalating much. 12 is better, but obviously it's not where it was at the end of December, over a 20% margin. So I don't see a late summer rally just emerging just yet, but as always, I'm going to keep you included in this, and I'm going to keep you aware of what's going on. Reefer rates are better in terms of overall better rates, but momentum is fading. Obviously, a couple of weeks ago we were looking at 270. Now we're down to about 266 in overall reefer rate. So we're starting to see that kind of fade a little bit. The thing that I look at, again, it's heavily driven by supply and demand. And as we have a considerable amount of supply still in the marketplace, it's not really doing much to trigger that change in pricing. So until we see one of those events really kind of take off, I just hate to say it, but we'll continue to start seeing these type of micro walks as far as growth. And I just wonder if any retail freight is going to help us out here in this particular category. That's something that I'm going to continue to watch as well. I also wanted to share this, the carrier net authority changes. This is what, remember that we talked about. This is the difference in carriers in terms of gaining and exiting in the market. I seen someone posted a tweet the other day. It's like, hey, we're starting to notice a lot more small carriers leaving the marketplace during this particular time frame. And I don't know if it wasn't, it might be worded a little bit differently, but that's kind of the gist of what it said. And then when I pulled the chart this morning, what he's saying is pretty true. So they're starting to spike again, starting to see that. Obviously, that with this being based on federal data, and federal data is really unreliable as far as timeliness of that, and it kind of goes back and forth. But this is something that we've seen over the last couple of weeks. So it's just a constant just drop off in overall carriers. So pretty significant decline in terms of drop off, and that's been the most significant decline that we've seen since the beginning of the year. So that kind of tells us it could be likely tied to, fuel. People just kind of stall out, some insurance renewals in there. I'm just saying, hey, just tired of it. So that's something that I'm going to continue to watch, and I'm going to make sure that you stay involved in this as well, because this is a very important key indicator, because this is the supply side of the economical equation when it comes down to the freight market for small carriers. So I just see capacity is continuously to trim, and we'll just have to keep our eye on it. And last but not least, I want to make sure that I leave you with the inbound ocean TEUs, is inbound domestic freight that's coming in. As you can see, we're starting to see a little bit of an ease slightly. Import volume fell 2.25%, down from its recent highs, and that's the first time we've seen a pullback since the sharp rally in late quarter 2. But it's still above March and May levels. So we're starting to say, yeah, of course, you're going to have busy ports. Busy ports equal freight that's moving inland. We just want to see what it does to volume. So does this downshift ripple inland is the question when it comes down to it. So I expect volume to hit inland markets about 2 to 4 weeks from this particular point, and let's see what happens. What we could be obviously that midsummer bump in overall volumes that we talked about. So again, I wanted to share this quick update. Give me the feedback. What did you want to see? Do you want to see more of? Do you want me to go deeper into? Just shoot us a message here. Put a comment down here in the chat, letting us know exactly what you want me to display, go deeper into. I'd be more than happy to do that. But in other words, I really want to make sure that we stay consistent with giving the information here and making sure you stay on top of it. So if you needed to go back and rewatch this, go back and rewatch this, and make sure you run your playbook when it comes to operating your business for the week. My name is Adam. I'm signing off. I hope you have a great week and take care.